Hi, this is Leslie Kramer, and I'm here at Institutional Investors Mutual Fund Awards Dinner. Joining me today is Bill Mann, who is a portfolio manager at Motley Funds. Bill was also nominated as a Rising Star by Fund Action News. Thank you for joining us today.
Thank you for having me.
So you began your tenure at Motley Fool working on the editorial side, and then you moved over to the investing side, where you now manage the Motley Fool Independence Fund and the Great American Fund. So can you just talk to us a little bit about what that move was like?
You know, it was really interesting. I didn't know what to expect when I was going over to the actually managing money, but I'd written and made stock recommendations for many years. And in some ways, it really was a good training for managing money. And in fact, in some ways, it's a little bit more difficult because you can, when you're investing money, you can control risk. And we used to always think of, in terms of when we recommend a company, we think of having 100% exposure to that one company because we don't know if someone out there is putting a lot of their money into every company. So it really made each decision that we made very, very important. And when you take that over to the investing side, you don't end up with placeholders. You don't end up with companies that are just, well, we'll see what happens. You are very, very careful with each company that you pick. So it was actually a very good training.
Great. And then can you just talk to us a little bit about what you think has been the most challenging side of the move?
I would say that the most challenging thing is it sounds like a it sounds like a high class problem, but we went from zero to about $200 million in 2 years, and so that means that each day when you show up, you have an amount of money to invest, and so every position that you have, if you don't invest more in it, is basically selling just a little bit of that position because you have a little bit less exposure to the position. So the fact that you have to make some decisions each day, even if the decision is to do nothing, it's a little bit of a different challenge than on the editorial side. You act either on a publishing schedule or you act when you see an idea. When you're managing a mutual fund, you need to have those ideas ready at any moment, just in case the money flows in, which for us, very fortunately, it has.
Okay, and then can you also explain to us a little bit about? You said you have a unique fee structure that actually rewards for outperformance and gives back for underperformance.
Yeah, we have a fulcrum structure with Fool funds, with the Independence Fund and with the Great America Fund, and basically. After a 3-year period, we are long-term investors, so we don't really consider the short term in terms of trying to align ourselves with our shareholders. But over a 3-year period, if we are beating our benchmarks by a certain percentage, we get paid a little bit more, and we find that really it's nice to have that kind of alignment with our shareholders. And by the way, if we're losing to the benchmark, we give a little bit back. So in that way, we are making sure that we're giving our shareholders what they pay for. If they get good performance from us, we're gonna we are rewarded and they are rewarded even more. But if we struggle, and there will be times inevitably that we will,
right.
We're going to rebate them a little bit, and so we think that keeps us a lot more aligned with them and their interests.
Yeah, nice. And then you decided to start these funds kind of in the midst of a recession.
Yeah.
Can you talk a little about that decision?
It was the decision to start a mutual fund company. The Motley Fool was 15 years old when we decided to start the mutual fund company, and I'll be honest, we kind of reluctantly got into the business. We had been asked by our subscribers for years and years. We trust you. We like what you've been writing. I don't want to do this myself. How do I send you a check? Where do I send you the money? And so going into 2008, we were looking at getting into the business, and then the market corrected very severely, and it was just, for us, it was really a matter of timing. We're long-term investors, and so we figured we'd go ahead and get started, and we knew that there was some risk that the market would keep going down, and we started in June of 2009 is when we actually got approval to start, and it turned out to be a very good time to be deploying capital. It was very fortunate in that way, but we did push to get to get out the door during that period of time. I guess the really interesting thing about that time is, of course, when you are preparing to launch a mutual fund, you have a set of companies that you are intending to buy. And so from the period of, say, March until June, we really had to switch a lot, because if you remember, March was the absolute low, and so by June, things had moved a lot. Right. So it was very busy investing pretend money, I guess, before we had the chance to really do it.
Right. That seems to have worked out well.
It has been good. I mean, it was a great time to start investing. I don't know that we'll get an opportunity like that again. I mean, sometimes opportunities feel very bad. In 2008 and 2009 felt very bad, but as it turns out, those turned out to be very good times to deploy long-term capital, and that's what we're seeking to do.
Great. All right, and just lastly, how do you feel about being recognized as a rising star?
You know, it's a very nice recognition for us. I mean, obviously, the Motley Fool has written about mutual funds for years, and when we got into this business, we said we want to try and do this right. So everything about our business is aligned towards long-term investing and towards making sure that we are aligned with our shareholders as best we can. So the management decisions, the structure of the fund, the structure of the fees, everything is consistent. So those decisions didn't fall with me, but they allow me to do my job in a way that I think is ideal for investing. So we feel like investing is its best when it's most business-like, and so we made sure that when we structured our business, we were allowing ourselves to make the best investing decisions we could. And I think that the results. I mean, it's short. We've been we're coming up on our second year. But we've had some good success, and we've made some good decisions. So we're very happy with, and very gratified to have been nominated to receive the Rising Stars Award.
Great. Well, congratulations again.
Thank you so much.
Thanks for joining us today.
Thank you.